Sorry.
Okay, no problem.
Go again.
So the second part of the conversation is how can this be used as a tax planning tool, if you will, okay?
Yeah.
So first thing is, depending on your income, you can buy more than one franchise.
Okay.
You can buy 5, 10. The biggest is 65. One person wants 60. They have huge income. $3-4 million a year for the last 4 or 5 years. Okay? Why would that person buy so many franchises? Well, not only can you use the deductions this year, back 3 years. Class 12 is one of the rare assets classes that you can carry back the expenses for 3 years to apply against income you've earned to give you a refund. So we have a lot of people that are using this as a means of recovering tax dollars they've already paid.
Yeah.
Okay? You can also use Edge as a means of melting down your RSPs. So for example, let's say you wanted to pull 100 grand from your RSPs.
Yep.
If you have no strategy, you're going to pay about 30-35%.
Yeah.
With Edge, you can pull it out and pay as little as 10%. Okay?
Yeah,
because
nice.
your deductions offsets the new income that you're pulling in.
That's right.
On the corporate side, there are a lot of small business owners, entrepreneurs, professional corps that have a lot of cash and retained earnings, 300, 500, right? And so forth. Well, you can use Edge as a strategy to mitigate the taxes on pulling money out of your
Retained earnings.
corporation retained earnings. Exactly. Okay?
Nice.
When you talk to people about going back 3 years, they go, huh?
Yeah.
How's that work?
Yeah. Very nice.
Very powerful. And this is why, again, we have so many advisors and accountants and tax lawyers coming on board recommending this to their clients, because they can bring significant value to their clients, because they can help their clients create new cash flow for investing, paying down debt, and just, in short, improving their retirement planning scenario. Because at the end of the day, you know, if you take the average guy who makes $100,000 for 40 years, he's going to pay about $1.6 million in tax. If you can cut that bill in half, you freed up $800,000 that he can invest for his retirement.
Yeah.
That's significant. That changes the retirement landscape for someone dramatically.
Absolutely.
Right?
Yeah.
We talk a little bit about the various, I'm going to leave this for you to read.
Yeah.
Okay, this is where we talk about exactly what is a Class 12,
Yeah.
the Section 85 rollover. That's where Edge buys your franchise using shares. You use the shares to pay off the note. That methodology and approach has been sanctioned by the CRA, and I'll send you the letter that they signed saying that's okay.
Perfect.
Very powerful, okay? And then this is important to note, because what happens is when you pay off the note, it triggers a capital gain. And everyone has a one-time 800,000 lifetime capital gains that you know about.
Yeah.
And so up to 8 franchises, there's going to be no tax implications whatsoever. Beyond that, it's a different story. But there are strategies to address that as well.
Nice.
Okay? And the last 2 things, number 1 is the documents available for your review related to the court case. There's the actual court case itself. It's 104 pages long. We'll send you that. Comfort letter from a law firm stating that the Edge and the prospect are identical. Okay? And then there's the framework letter. That's the letter signed by CRA and the Crown, accepting the Section 85 rollover transaction.
Yeah.
And then there was a newspaper article where it was big news.
Yeah.
It was a major victory. Okay.
Nice.
And then this talks about the 3 different exit strategies for the note that we touched on.
Yep.
Okay. And that's it.
Perfect.
One of the best applications that I love about this now is I'm a maniac for complexity. I just like using detailed and analytical crap, right? I don't know, I just thrive on it.
Oh, sorry, Neil. One last thing. This, you don't have to videotape this questionnaire.
Okay, whatever.
Yeah. So what we do.
I'll just delete it. It's no
Sure.
big deal.
Yeah. What we do with everyone is we say, listen. This is a corporate side. Sorry, there's a personal side, right? So we say, if you're my potential client, I would simply say, listen, Lyle, here's what we're going to do. Let's give you a report, so that'll help you make a decision or not make a decision, right?
Oh, excuse me. Yep.
So with the report, what we do is we simply ask you your name and so forth, and then some very simple information. What did you earn in 2011, 2012, 13, 14? What do you think it's going to be 15, 16? That's it.
Yeah.
We send this into head office. They're going to generate a 10-page report. That report is going to come back and show you, specific to you, what the optimum scenario is in terms of how many franchises you could buy to maximize tax recovery based on your income. And it'll also show you what the future revenue will be. If the recommendation, for example, is 4 franchises, it'll show you that the potential revenue for your franchise is 4 times 133, for example. And so people get this. report and they can make a decision. And what we found is about 80 to 85% of the people who complete this end up buying a franchise, at least one.
Wow, nice.
At least one. When they see, because once they see the numbers, it becomes very real.
It's like a professional
It becomes
report.
it's extremely. It's done by a couple of CAs. So if you were to take it again as my client, if you were to take it to your accountant, so I'm your financial advisor, for example, you take it to your accountant's going to look at this report and say, these numbers all make perfect sense, but I need to understand what the hell this edge is.
Yeah.
So we get a phone call, we talk to the accountant, we educate them on what edge is, we send them a link to get a free account.
Yeah.
Once they get the free account, it's game over.
Yeah, then he wants one too.
Absolutely.
Yeah.
100%.
So what
You got it.
my strategy was when I did the tax savings program for all my clients,
Yeah.
I bought houses.
Yeah.
Because basically, people ask me what I do. I
Okay,
say,
thank you.
I create tax savings and investment. That's
Yeah.
what I do.
Yeah.
That's the simple
Yeah.
Reader's Digest version. But the technical, analytical part of it is strategy. So here's a guy's RSP. How many people actually know really what the hell's in their RSP? I did a project about 15 years ago, and I heard about this working opportunity fund. It was a VC, Venture Capital Corporation mutual fund.
Yeah.
You put in $1,000, you get from the government, BC government, because the companies they buy are homegrown companies, BC run, BC employees, stimulating the BC economy. So the British Columbia government, and Alberta does the same, gives a 30% tax credit. If you invest in this and it stimulates the economy, they give free money away. So you put in $1,000, you get a $300 instant refund.
Yeah.
And I like the way Claude says it's rinsing out the risk. Your original capital is coming back.
Yeah.
So then you put this in your RSP and you get another 40%. So you get 70 cents back on the dollar. So now you're at risk of $300. But the powerful thing I heard about this was that I could buy a piece of paper, like a share certificate, and we don't know what it's going to be worth, but the accountant will evaluate it based on your cost base. So if let's say your shares cost you whatever they cost you, you got your refunds, but now your shares at the end of the day were worth $26,000. You understand what I'm saying? So these shares were $26,000. Your cost base was pretty much whatever your payments were for the franchise. So you did pay for the interest costs, and you got deductions on that. But the capital gain, which was brilliant, being Canadian Control Corporation, the CCC, there's no taxes on the gain because it's a private company still.
Correct.
Like that's a windfall.
It is.
Then you got your 17,000 surplus, but you still have these share certificates after you paid off your 26 grand. What would you do with that? I would do this: stick these share certificates in the RSP and take out the cash in equivalent value. So now I got 26,000 cash. I'm gonna buy a freaking revenue property.
You got her.
Now I got something because this is what you call a swap.
Yeah.
And so you got 26,000 surplus, plus you got another, what was it, 17,000 surplus,
Yeah.
and you got a going concern business. Those shares, I suspect, if they do sell to Google and they got 10 million users,
Sure.
those will blow up in the RSP.
Oh yeah. Yeah.
They're going to blow up.
That's the intention.
And then, you can do it again and again. It's like peeling an onion.
Yeah.
And then they got assets in a lower tax
So
environment.
when you say
opportunity.
that you're going to take the 26,000 cash,
Called the swap.
okay, right?
Yeah.
Are you getting a bank loan against
No,
your shares?
Absolutely. No, because, okay, what's the question? I want to repeat your question to me.
Okay.
When you buy a franchise,
Yeah.
you're paying 10,000, 10,000,
Yes.
and 6,000. That's
Yes.
prepaid interest.
That's correct.
The franchisor is loaning you the 100,000.
That's correct.
So you're just paying interest payments,
That's right.
which are 100% deductible.
Right.
But
What I don't
what's
get-
being deducted is the class 12. The
Yes.
cost of the franchise, 100,000. So your question is, when you do the swap, you're putting in something of value.
Yes.
That's valuated,
Yeah.
and you're swapping out equivalent value. Can you take the receipt? Just grab the receipt.
Yeah.
You now got the 26,000 cash. So you got your cash. What are you gonna do with the cash? Could you use an extra $26,000?
Okay, what I'm confused and pardon my ignorance.
Go ahead.
How do you get the $26,000 in cash?
Okay, this is your self-directed RSP,
Yes.
and you can put juice, coffee, tea, milk in the
Yeah.
pot. The cup.
Neil
is
is making the
RSP.
assumption that you have the 26,000 sitting in cash in your RSP.
Yeah, your RSPs are mutual funds or stocks or
that's the
you
assumption
cash
that
them all out
Okay,
and you put them in
that-
cash
okay,
position
that
and you
makes-
swap out
okay.
cash.
Okay. Yes.
This is freaking
You have to have 26,000.
yeah, true. And who like 50% of people got
Yes.
something stuck in a lock-in account?
Yes.
And you can do this with lock-in money too.
Yes.
You can't get it until you're 55 or
That's
whatever.
correct. My wife has one that, yes.
So you have a self-directed, this is like
Got it.
money printing.
Ah, that's a good
I
idea.
freaking love it.
Yeah, that is good.
A lot of creative